From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Friday, February 21st. This is Tony Fratto with Hamilton Place Strategies. I'm here with my colleague, Bryan DeAngelis, also from HPS. And our friends from Markets Policy Partners, John Fagan, Brendan Walsh. Guys, interesting week. I mean, it's some... we have more coronavirus. So I think we need to spend a little bit of time talking about because it is having an impact on some macro impact. Definitely, in different impact in different countries. Definitely for certain firms and sectors. So I want to spend some time on that. We had some politics this week too, and I think big political news over the next 10 or 11 days is maybe going to decide this Democratic primary. So we're going to get into that later. But let's start with coronavirus. We've seen markets down a little bit. They're pointing down today here in the United States. My sense on this for a while has been that there is an impact. I think it's bigger than markets have been expecting. No, I don't know anybody, and I'm certainly not thinking that this tips the United States into a recession. I don't think that's the case at all. But it is an impact, and it is a pretty big impact in China. We've seen some of that impact in Europe. And I would just say for the global economy, we weren't projecting very strong growth in the global economy. Right. And then we see things like Japan, which I want to talk about. John, I know you have some things to say on Japan. The world's third largest economy had a dismal quarter, and it doesn't look to be getting better, especially in the face of coronavirus. So there's a real economic impact here, and we're seeing it in multiple countries. What are you seeing, John?
Yeah, it's a very it is a very disturbing picture. Thanks, Tony. And we have seen the view from financial markets has been really uneven, to be honest. When you look at equity, U.S. equity markets in particular, but even equity markets around the world, when you look at the Shanghai Composite, the Hang Seng in Hong Kong, some of these others have rebounded over the last couple of weeks. There has been a sense that equity markets are more given to optimism and to try to look past.
Japan, too, is at the highs.
Right, to try to look past this economic and corporate impact as something that would be fleeting, something that given a reasonable timetable toward containment, you would get a big payback, a big snapback in growth, and you would have central banks resetting to even more accommodative policy measures, as a safety measure for to balance. And on the other side of this, actually, you would have a potentially more favorable outcome than otherwise you might have. Now, that's sort of counterintuitive, but that's been sort of the fundamental story that a lot of equity investors and sort of the positive folks, I mean, the S&P 500 just put in a new high on Wednesday.
Yeah.
But as you say, the level of certitude, the conviction in this, when you look at what is driving the S&P 500, there are a lot of defensives. Utilities are doing very well. Big tech, which investors feel very safe playing in whatever weather, those are really leading the charge. The narrowing leadership, as they say, fewer and fewer stocks going to the upside.
I saw a chart yesterday that we're at 35%, which is the low end of historical stocks within the S&P are beating the index.
Right. So when you look at it from an index standpoint, boy, the S&P 500 looks like it's just, happy-go-lucky and looking straight past this coronavirus. But when you look under the hood, there are signs of increasing caution. And when you look away from the equity market and you look at the Treasury market, boy, the picture is a lot more somber. Treasury yields are extremely low. They're almost as low as they were at during the worst.
Do we talk about inversion again? I mean, like we did.
Coming back.
I mean, the trend is, when you look at 3-month 10-year, which is one segment of the curve that people look at, and when we talk about Treasury yield curves, we're talking about the yield spread between two different maturities points on the Treasury in the Treasury market. And if you look at the 3-month bill yield versus the 10-year Treasury yield. The 3-month bill is higher currently than the 10-year Treasury yield. That shouldn't happen, and that is that inversion. Now, the most closely watched portion is the 2s, 10s, the 2-year, 10-year. That is not inverted, but the trend is
still
definitely
very flat. And
it is headed back. I mean, we've already flattened more than 20 basis points this year. It's only away from inversion about 12 basis points, 11 basis points. So we're knocking on the door. And this is the commodities markets, the foreign exchange markets are registering.
That's the market that it is most interesting to me. What's been going on with the dollar.
Yeah.
The coronavirus has really helped push a strengthening of the dollar.
I mean, is it classic, flight to safety of, people, whenever there's a disruption, right? I mean, we see this over and over again. There's any global disruption, people buy dollar-denominated assets, mostly treasuries, and so is it that what we're seeing?
It is in large part. Certainly, the flight to U.S. assets is a classic safe haven trade motif. One of the classic safe haven trade motifs that is malfunctioning is the yen.
Exactly.
The yen is traditionally when volatility goes up and uncertainty and concerns are out there in the world and risk assets are falling, the yen rallies. Why is the yen even more than the dollar? Usually it's appreciation.
Well, when you have to price in a consumption tax, this is really one of the it's one thing to shoot yourself in the foot, right? It's another thing to shoot yourself in the other foot, right? And that's kind of what the Japanese have done, right? Like they've had the experience with the consumption tax. They saw it was not a great experience. I'm defend the IMF and really smart people over there. IMF keeps pushing them to increase the consumption tax because they're worried about the debt overhang, which they really ought not to be worried about so much with Japan for a whole lot of idiosyncratic reasons.
We've been worried about it for 40 years.
Forever, right? And it's just it's bonkers for them to worry about it the way that they do.
Yeah, especially with the demographics of Japan.
And so this really hit growth. I mean, I think estimates for growth in where that maybe would knock down negative 3%. It was in the 6% range, really ugly.
Yeah.
And on top of that, you have coronavirus, which is really hitting Japan pretty hard too.
Yeah, absolutely. And just this morning, we saw the beginnings. We haven't even seen the full, not even close to the full impact in global economic data at this point. Preliminary numbers for February are beginning to come in. Just this morning, we got the purchasing managers indexes on the factory and service components for Japan, Australia. We saw UK and EU as well. And it was pretty stark. You saw, across the board downside surprises in Japan, very similar downside and downbeat readings in Australia. Whereas you got Europe was actually better than expected. And the UK was the same story.
It was better than expected, but expectations were not great.
That's true, yes. But when we're looking at this really speaks to the expanding and currently very uneven impact on growth of the coronavirus. Now, is it and this is, again, early days. The survey was done earlier in the month, and this is a preliminary number. The revision might be, one might guess that they might be marked down even further. And in a situation like this, we've seen these divergences, and among them the U.S., the number is coming out shortly here this morning, but the U.S. is expected to be, again, sort of an island of a bastion of economic strength, and that fuels the dollar. That what we call in the past the divergence trade. Whenever we've seen U.S. policy, monetary policy, and economic vitality diverging from the rest of the world, it's really been a huge support for the dollar, and that's what we're seeing.
I was a little curious about this, if you don't mind. The coronavirus, how long will we see the kind of tail of its impact? I saw headlines this week. Apple's worried about it. Apple's concerned and dropping in their price. Will we see this
Coca-Cola
just second quarter, third quarter? Or
that's a good question. And so I was curious about. So it's obviously those the ones who have deep supply chains.
Yep.
They either have deep supply chains in China, or they have a big relations. They sell a lot of products there. Right. So like the Coca-Colas. But then also, what about different sectors like transport? Are we seeing it in? Are you seeing it in transports also on rail and other shipping? Obviously,
the
shipping has
shippers,
been
yes,
hit pretty hard.
Yeah, absolutely, and certainly airlines have been a big part of this story. They were an early canary in the coal mine in this,
Right.
and so they've been feeling the heat, canceling routes and extending those cancellations out. And not every airline has the same, but some are already out in April on some of their routes to China. And this is
casinos have been especially hard hit.
Right, and the growing list
That revenue just doesn't come back. You don't go gamble twice.
This is a point that Brenda and I were talking about this earlier this week, was just this distinction between manufacturing and services.
Yes.
And when you talk to people on the street about what they expect, they say, well, it'll look like SARS. It's gonna be down for a while. There are a lot of stories about people who were sourcing product out of China who have any experience with it. They knew that before the Chinese New Year, the Lunar New Year, to stock up because they're going to have that dip, and it takes a while for factories. So this is actually coming at a time when there is a natural dip in production out of China. So a lot of experienced producer or buyers of Chinese product.
It's a great point.
Right. They were building up inventory ahead of the Lunar New Year, and so they're still working off some of those stocks. So some of them have not experienced that yet. But when you talk to guys on the street about they expect a V-shaped recovery.
Or even a check, not to get back to where we would, but we're going to be off to the races.
Yeah, paid back with interest.
Yeah.
It seems to me that they're only talking about, tradable goods.
Yes.
And not tradable services. And the tradable services, you don't get those back. They're gone forever. Like the tourists who were going to China and were going to be in hotels and restaurants and flights and taxis, they don't come back, they don't put off their trip until next month. They missed the window. They, decided to go somewhere else or stayed, in their domestic countries. Chinese tourists who came here, and who, would go to Disney at that time of year, they don't go to Disney again. All the people who were going to the movies in China, they don't go to two movies, later to make up for the movies that they didn't go to in January and February. They don't, that
Disney
doesn't
would be a good example when they're going to give us guidance sooner or later. But that's a perfect point where Chinese travel, but they also have, a Disney World in China.
They have a Disney in China. And by the way, like if you've ever seen Disney in Paris.
Yeah,
you see, Asian tourists in those places also. They're spending. Asian tourism is underpinning a lot of the global tourist industry. So I think you're going to see that show up in their numbers quite a bit. Yeah.
No, it's a really, really important point. And so much of the global economy at this point is services. Well, especially in America. It's manufacturing is not that big of a deal. It's 15%,
Yeah.
And
everything else is buying stuff.
Right. And the news has featured so many stories from the cruise lines.
Yeah.
And that has featured very prominently in people's conception of what this virus is all about. That will obviously be something that they need to cope with, that industry needs to cope with down the road. But that was part of the story this week. And we saw, again, market participants focusing on declining cases in the epicenter, Hubei province, basically Wuhan, and seeing the numbers out of China. And every day, even past last week's reset of numbers higher because of the diagnostic changes that officials made, the daily count in Hubei province is something that analysts have keyed in on. And that downtrend has buoyed up spirits and reinforced the bias that this is going to be fleeting. This is going to be managed relatively timely in a relatively timely manner. But the cruise ship, the fatalities of Japanese nationals on the cruise ship, the news about the outbreak, the widening outbreak in South Korea, where cases have quadrupled apparently over the last 2 days, reported official cases. And there was a headline yesterday about an outbreak in a hospital in Beijing. The there are chapters left to be written here, and market participants are paying.
And actually, to your point, Tony, so the market services and manufacturing PMI just came out. So the both of them missed, but for the first time in a long time since the recession, the service PMI is below 50. It came out at 49.8. We were expecting a 53.4. So it's definitely seeping into the
People
U.S.
should have paid attention to my tweets on this.
Exactly. Yeah. No, you made a lot of good points last night.
Yeah.
I mean, this fell off a cliff. We were at 54.
I think it's just to me, it's just the thing that services are just really hard for people to count.
Yeah.
Like I just gave you like some of the things that are countable. There are a lot of other things that are really, really hard to count. And so I understand why people have a hard time paying that. Goods are really easy to count.
Yeah.
Shipping containers are super easy to count. To
the GDP. The first prints we do are, usually way off from the final ones that get revised like 3 years from now.
Yeah, definitely. Or even 2 months.
2 months from now.
But So that stuff is hard. Look, I think it's. I think there is a lot left to this story. I think. I think we're going to be learning here a bit. The G20 finance ministers are in Saudi Arabia. We're going to hear from them on what they're going to be reporting from their economy. So we'll have a little bit more to look at next week on this. You will not catch me on a cruise. I think I saw a quote. Yeah, quote in a story was something like the lesson that we've learned is that these are floating petri dishes. Like, to put that on an ad, it's like I don't want any part of that. So no cruise. Bryan, we're going to come back. It wasn't exactly the Love Boat at the Democratic debate.
I would call it the Royal Rumble
the other night. Yeah. So let's take a break and come back and talk about where politics is taking us to. You're listening to the HPS Macrocast.
Every 2 weeks, HPS measures U.S. adults' feelings and expectations for the economy. The HPS Civic Science Economic Sentiment Index accurately measures movements in overall national economic sentiment and provides a more sophisticated alternative to existing economic sentiment indices. To learn more, contact us through HamiltonPlaceStrategies.com.
And we're back on the Macrocast. Bryan, that was like... I thought like the first 5 minutes of the Democratic debate the other night was like the first round of the Hearns-Hagler fight. It was just like, and maybe our listeners are too young to remember the Hearns-Hagler fight, but it was just like punches and windmill being thrown in every direction.
My wife loves The Bachelor, and I thought we were watching that.
It was a lot of pent-up aggression. It was obviously Michael Bloomberg's first appearance on the stage, and he's been disrupting this race for about 10 or 12 weeks now, and everybody came knives sharpened, guns loaded.
Yeah, and they had done the research on Bloomberg's past.
They had done the research, and it had been starting to trickle out. I think in a weird way, it might have been a little strategic on Bloomberg's part. He knew he was going to get beat up at some point, and he came out and he let them sort of throw all their pitches. And I think with his billions, going with the boxing metaphor, he tires out his opponent a little bit, and he's still able to get up there on the ads, get ready for Super Tuesday, and have this behind him before, believe it or not, next week's debate.
It looks like there were stories out today about Warren from the January, February. It was a really January reporting about the fact that she needed a $3 million line of credit. She didn't actually access it, but she got a $3 million line of credit because she had a fear of running out of cash in that period. And she said something about fundraising in February. You have to assume because of how poorly Iowa and New Hampshire went for her that her burn rate is pretty high. And then she came out yesterday and said she's good with super PACs now. And so my point though is that for a number of these candidates, money is a real issue.
Yeah, this is the time of year where your bankroll gets pretty thin. Yeah. I mean, you're seeing it on Buttigieg as well. I mean, Klobuchar has seen a little boost late, but she sort of started with nothing, so she doesn't have a ton of deep pockets here either.
And she can't preserve it either, right?
You can't.
She needs to build on that. She needs to burn. She needs to spend it because it's going to be over.
That's right. That's right.
How many states are involved in Super Tuesday?
14 states.
I think it's 4,
1,588 delegates are up for grabs. So it is.
But that's a lot of commercials that instead of just one state, you got to run it in 14 and things like that.
Yeah, and not just these aren't just 14 states. I mean, you have California and Texas in there, who each, if they were on their own, would be members of the G20 themselves, right? They're enormous economies, outrageously expensive media markets, and some of these candidates have not run a single television ad in any of these states.
Wow. Right.
I mean,
and the question is, are they going to be able to?
Yeah, that's the problem.
Besides Bloomberg and Sanders. I mean, Sanders has been a fundraising machine for, frankly, the past 8 or 10 years.
Yeah, that's not going to change.
And that's not going to change. He's going to continue to raise a ton of money. As long as I think Biden and Buttigieg and Klobuchar and Warren fight each other, that money is going to be divided 4 ways, which makes it particularly tough on Super Tuesday, which is not well off into the distance.
So it's Friday, right? Yeah. So I mean, I keep saying it's 10 or 11 days away. It's 9 days away. It's Tuesday, March 3rd. That's right around the corner, and so these next 9 days are going to make a difference. So we have so here's the deal: we have Nevada tomorrow. That's right. By all estimate, and Nevada's been voting already. Early caucus voting. By every estimate I've seen, every poll and expert opinion I've seen, Sanders is going to win going away in Nevada. Someone is going to come second. I think it's Biden or Buttigieg. Probably Biden. Yeah. I've never been of the view that Nevada there's momentum coming out of Nevada. It's like, whatever happens in Vegas stays in Vegas. Yeah. And I think that's the case. And I think every other candidate not named Bernie Sanders is going to say, yeah, these caucuses are a disaster. Discount them. Don't pay any attention to them. Let's go focus on South Carolina.
The only caveat there I would say is Amy and Pete. If Amy does another third place there, she's got a little bit of a story to tell. If Pete does another close second place, he's got, now he's won Iowa.
That's true.
He's second. But yeah, Biden's not going to get a huge bump out of Nevada. He's looking at South Carolina. Warren, I don't think she's going to have much of a comeback story.
You can make, I guess the story for, let's get into Warren in a second, but the story for Biden is, if it's a second place finish for Biden and then a first place finish in South Carolina, which has been expected. He has called it its firewall. We've said it's a must-win for him, even though that race has been tightening in South Carolina. But if he can go from, take a second and a first, then he goes with some momentum into Super Tuesday. Maybe he gets a little bit more money, and maybe it starts looking more like a two-man race. I still think that's a long shot, and I still think
it is,
and
that creates a little bit of a crisis within the party. Like not everybody, but a lot of the party is looking for the alternative to Sanders, and we have been over the last 4 or 5 weeks as Biden's fallen, putting all of that on Bloomberg's shoulders. Bloomberg, as we discussed, got his butt kicked the other night, and there's a lot of second guessing on that now. And if Biden starts to see some momentum, you'll see a swing back. Is Biden our answer?
What was the deal with Bloomberg?
I think there was a lot he had to deal with, first of all. I mean, those first 5 minutes, there was attack on women. There was attack on his business dealings. It was everything. I think Warren just found her perfect foil in Mike Bloomberg. I think the best thing that could have happened to Warren is he jumped into this months ago. And I think, I don't think he was fully ready. I don't think he's ever been on that stage. Just keep in mind, even newcomers like Pete have now been on 9 or 10 debates. They've been out there. They've been doing these forums. This was Bloomberg's first time outside of a debate on a mayor's race.
And he hasn't felt the heat. Been in that a long time. And when you're the boss of a big company and a billionaire, people don't say mean things to you.
That's right. Yeah. I don't want. Some of this could have been arrogance that I got this and I'm gonna go out
so maybe
his
do it, handlers threw him out to
go have fun.
The irony,
good luck, man.
So the irony of this is you have so you do have Bloomberg who I know it's not fashionable to like billionaires. I'm good with billionaires, but he's got a really good.
You made this point yesterday.
Billionaire story to tell, right? Of all the billionaires out there, I mean, maybe Gates has a good billionaire story,
right?
But this is a guy who was he wasn't born into money.
No, he's from Medford, Massachusetts,
right? And he invented a brilliant machine.
Yep.
The Bloomberg screen,
We're staring at it right now.
John uses it. Yeah. We all use it. We use it here.
But I think
HPS.
a lot of America has no idea what it is. He needs to do an infomercial explain what it is and what he did.
The story is like he invented this machine that's really democratized information for investors and traders. Yep. I mean, he's got a great story to tell. And he's standing up there apologizing for being a billionaire, more or less, and apologizing for positions he took. And it's not a good look. But in the meantime, he's being attacked by, Elizabeth Warren, who I don't know that she's ever created, a dollar of economic growth in her life. I know, Bernie Sanders hasn't and doesn't want anyone else to either.
Right.
So, but so he actually, Bloomberg actually had the opportunity to tell his story and make a case for, good capitalism. I mean, it is a Democratic primary, but the story to buttress the sort of socialist.
Well,
he's a large philanthropist too,
need,
and he actually gives a lot of his money away. Does a lot of really good things.
He does. I don't know if it sells very much, though.
I know, but you know what I'm saying. He's got to tell his story better.
They do need to tell that story because it's too easy of an attack.
Yeah.
People know him as Wall Street. People know him as a billionaire. You saw even Klobuchar go after him. We don't need another billionaire in the White House. And until he explains that I'm not Trump. I didn't inherit this money.
Right.
I didn't move money around in a different hotels to try to make more. I actually built something.
Yeah.
And to your point, democratize how we get information on Wall Street. I mean, there's a story there. It's going to be a hard sell to kind of convince Americans.
Well, and then there's the question as to whether he can actually do it. I mean,
but at least you can have a commercial that does.
You got the resources to do it.
Yeah.
And going into Super Tuesday, you said the best thing to happen to Elizabeth Warren was Bloomberg getting in the race. Right. I also think the worst thing for Democrats was Elizabeth Warren having a good debate, because now I think a lot of people are pouring money into her that are going to fuel her and keep her in the race going into Super Tuesday. And taking that 10%, which is, by the way, is only 10%. It's a 10% that whoever...
Which doesn't really get her delegates. Most states you have to hit 15%.
It gets her 0 delegates, right? It's below the threshold. And it's keeping that, whoever is in second or third place from leapfrogging Bernie Sanders. And
so he just keeps accumulating enough delegates in a month. Yeah. The math just is done, and Sanders is the guy, right?
Yeah. And Bloomberg too. And Bloomberg taking some.
One little nugget before we wrap up that I'm watching. Massachusetts and Minnesota are Super Tuesday states. Do Warren and Klobuchar want to go in and potentially lose their own states? Or does that start to put some pressure on them after South Carolina?
You know what? I think you're right. I think, Bryan, you're like that's exactly right. That would be hugely embarrassing for them to do that. And
we already have a primary race in Massachusetts. There's a ton of young politicians eager to jump up. Like it just starts to make her.
So that would be really embarrassing. She is going to go through Nevada, South Carolina. So the first 4 contests with 1 third-place finish and probably 3 fourth-place finishes. Right. So what is the case for her for even being on a ballot in Super Tuesday? And the same thing for Amy Klobuchar, who, I kind of like Amy Klobuchar, but at some point you need to
win something. Right.
You need to go win something. And, again, these are idiosyncratic contests. Tom Steyer's probably going to take 3rd place in South Carolina. Why? Because he's
blows my
all his
mind,
money. Right? Mine too,
Yeah.
And, but he's probably going to go finish 3rd in South Carolina. That means that a bunch of these guys who need the 2nd place finish are never going to get a chance to get a 2nd place finish. They've got to drop out and let someone else get in there and compete on Super Tuesday.
But on Warren, do you think if her fear of losing Massachusetts is then when she's running for Senate, a young person's going to run against
Someone's
her?
going to say,
I think you're right.
You're pretty vulnerable here.
Yeah, because it's happening now with Kennedy.
Smoked in New Hampshire. You got beat in Massachusetts.
So then
very vulnerable.
Yeah, her career is just over because she's never coming back. Wow, that's interesting.
Oh, don't count her out.
We haven't seen the last of Elizabeth Warren.
Well, you know what? So tomorrow is... it is Vegas.
Yep.
I mean, you go and you throw the dice. And we never know, right?
Well,
So
we have a big boxing match tonight too.
Yeah, we do. Yeah. So look, maybe someone will surprise tomorrow, and we'll be talking about a different story when we're at this place next week. But a lot to look forward to, and we'll be paying close attention here on the Macrocast. All right, let's take a break and then look ahead to next week.
HPS is seeking a senior-level public affairs professional to join our dynamic team. If you have 10 years or more of relevant experience in communications and you're interested in the topics discussed on the HPS Macrocast, this just might be the role for you. Apply today at hamiltonplacestrategies.com/careers.
All right, we're back on the Macrocast. Brendan, what kind of data are we looking forward to next week?
Actually, it's a pretty interesting week. We got some housing data, and with the lower rates, the mortgages are down, and it's really fueling a huge, expansion in the housing market. I guess people are aware of it, but it's somewhat an underreported strength in the U.S. economy.
Is that translating to some of the other sort of to the Home Depots and Lowe's and
But actually, a lot of the problem is lack of supply. We just can't hire enough people to build the houses that we need.
Oh man, so Mick Mulvaney,
great.
Was it in Europe? Is that where
he's somewhere abroad?
Giving a speech and talking about the severe lack of workers that we have in the United States to fuel the expansion of growth. And I thought, do you ever think about walking across East Executive Drive for the old executive office building and having a conversation with a couple of people in the West Wing who are,
isn't that your job?
Hell bent on restricting immigrants from coming into the country. I mean, that's where I would, instead of giving a speech overseas, how about walking across the driveway and giving a speech?
Yeah, no, but it's really holding it back. So all the prices are going up and all the numbers are good, but everybody says it could be a lot bigger if we could build them quicker.
Yeah.
Then we also get the second estimate for fourth quarter U.S. GDP. So it came in at 2.1. I guess we're expected to go up to 2.2, but and then the U.S. economy is tracking back to that 2% GDP rate, which we were, basically for all of Obama years, and then we had a little pop because of the tax cut, but we're back there. And then the other kind of measurement that the Fed watches is the PCE price index. So this is the preferred one that they watch. There, the core, which takes away the more volatile food and energy components, and the Fed kind of targets a 2% yearly rate on that. But we've been really kind of at 1.6, 1.5 for the last 6 months.
What was the price data we got earlier this week? That was
the PPI.
PPI,
yeah.
Right?
So the CPI,
producer price index,
right? That was a huge pop,
strong,
in both the core and the headline. So it wasn't just the energy prices went up.
Yeah.
The Powell Fed has very much narrowed their focus explicitly. Other previous Fed administrations had a lot of other data points that they would reference and that sort of stuff. We've really seen a narrowing to the core PCE price index, and we've seen the Powell Fed sort of dismiss labor market growth and a bunch of other stuff, and so it's a relatively tight.
Only a weakening of the labor market would get on Powell's radar. If we keep the unemployment keeps going down, he's going to ride that. He's not going to try to tighten the economy.
That's right. I mean, the messaging from the Fed has been very steady. We got the minutes from the January meeting this week. We had Vice Chair Clarida speaking this week. We had Chair Powell's testimony last week and a bunch of Fed speakers, and it was all, the message was, we are steady as she goes. We're waiting for the impact of our rate cuts from last year to play through, and we want to see that. We still have, they're watching the impact from the coronavirus. The market, however, begs to differ. The market has now, as of this morning, pricing in a full rate cut by July.
Interesting.
And more to come after that.
Yeah. Well, we will know a little bit more about coronavirus and some of this data this time next week, so get ready. And the political results too.
That's going to keep going.
Yeah, definitely. So.
Probably no more clarity. Yeah.
No, it's going to be fun.
You guys are going to nominate Bernie Sanders, aren't you?
I think
it's sort of looking.
I think the same way that we dismissed Trump as a viable candidate 4 years ago.
Oh, there's a lot of
the same exact things happen to Bernie, but they both have that core base that keeps you in the fight, and then
that's right. He'll
come
keep
the end, you're
winning
like,
his high 20, 30%.
Yeah.
In all of Super Tuesday states,
and then voters have to make a tough choice.
All right,
are you going to vote the party, or are you going to vote?
I'm going to predict that. At least one, if not two, candidates are off the island next week. This time next week.
Yeah, I would agree with that. Yeah.
Okay.
Yep.
And we'll see what the dynamics of that are. So maybe we'll come back and talk. We'll come back and talk about this again next week.
That'd be great.
All right, guys. Have a terrific weekend. Thanks for joining us on the HPS Macrocast. We'll talk to you next week.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share. Find more from Hamilton Place Strategies at hamiltonplacestrategies.com and follow Tony Fratto on Twitter @TonyFratto. Learn more about John Fagan, Brendan Walsh, and the work they do at Markets Policy Partners by visiting marketspolicy.com.